Hello everyone. Today we will be analyzing the situation with Bitcoin, which is trading at $68,200 and has made an attempt to break out of the range it has been trading in for many days. Let's take a look at the chart. Let me remind you that we are doing this review on the QuantFury platform. This is the platform I trade on, where I don't pay any commissions and which you can consider for your own trading. Now let's look at the key level that originates from March 11th, 2024. This level is $72,078. In other words, we start by analyzing the past in order to understand the present. These are Bitcoin's daily candles. I've specifically highlighted the level with a yellow rectangle so you won't get confused about which level we're looking at. Notice that it's marked just below the highest daily candle close. This is not by accident, because here we were approaching it. At this point, we were testing it, here we tested it, and here we tested it as well. When we finally broke through it, it turned out to be a false breakout. Then there was a move down shaking out excess buyers, followed by a final move up. You can see how high Bitcoin rose after that. Now let's return to the present and look at the current situation, taking into account the level of $72,078. The day before yesterday, the daily candle closed above this level, and yesterday's candle closed below it. Now we've returned to the base of the candle from March 4th. Let me zoom in. And from this point, we have every chance to get a final breakout upward, heading toward the $78,000 area. It's very important how the current daily candle closes. If it closes with an engulfing of this green candle, then we forget about growth, and our priorities shift to the $63,000 level, to the base of the green candle from February 6th. But if we don't see an engulfing of the green candle from March 4th, then here we look for a long entry point on the hourly time frame. That is, on the hourly candles in this area, we need to see a bullish engulfing pattern. This will be a signal to buy. Accordingly, we have another very important level, that's $73,165. And technically, until we close above this level, we remain in a sideways trend. This is the level of the largest red falling candle, which we still haven't engulfed, even though we broke through this level with a wick yesterday and the day before. That's the situation. So technically, an upward movement is expected, but only on one condition. If we do not see a bearish engulfing of this large green candle from March 4th today, there's nothing more to add here. And the target for this growth will be, first and foremost, the 50-day moving average. That's $75,000. That's the base of the daily candle from February 4th. That's 75,700. And the next technical level here was marked at $78,000, but I would probably move it to this area. This is a more reliable situation. A more reliable level is $76,322. Let's switch to the monthly candles and see what we have here. And here we see that last month, February, we closed with a bearish candle with a full body and with both a normal upper and lower shadow. And this suggests that with high probability, either this month or in the coming months, we will see a new low, lower than what we saw in February, which was exactly $60,000. And the target for this decline is obviously the 50-month moving average, which is around $57,500. Well, maybe $58,000. And at the same time, this roughly coincides with the area of the lowest candle close in August 2024, $58,800. So a lot points to the fact that we will update this low. So according to the daily candles, if we see a bearish engulfing today, we should expect a decline into this area. Weekly candles. Let's take a look at them. Here, the situation is the opposite. That is, we broke straight through the 50-week and 100-week lines and have approached the 200-week line. And basically, in the case of a bullish engulfing on the weekly candles, well, at least for last week, we have a chance to move up to the 100-week average, around the level of $87,470. Well, $87,500. Maybe a bit less, maybe $87,000. But again, it's very important how the current week closes. There is, of course, a nuance here. The engulfing of last week's red candle is not a full-fledged technical reversal. Why? Because last week did not update the local low. If we had engulfed that week, yes, meaning in the area of $77,000, then with high probability we would have seen movement into the $87,000 range, and potentially toward the 50-week moving average around $98,000. But for now, it's too early to talk about that. Let's switch to the daily candles and once again highlight the key point of the market at the moment. Will there be an engulfing of the March 4th candle or not? If not, we look for a long entry point. If there is, we forget about longs and start considering only short positions. With that, I suggest we end the review. Let's wait for the end of today, wait for the current weekly candle to close, and then on Monday or Tuesday we'll do a new analysis. We'll see where Bitcoin is headed and what the chart is telling us. Subscribe to the channel. See you next time. Goodbye.